Today I got a sell signal here. I got a sell signal here on Wednesday, which is 2 days ago. If I had taken it over here, I would have made the profits over here. And this is the day before, the days before, another signal here. And this is another signal here. You take one here, you take a profit over here. Hello, and welcome to another video from Tradecraft Simplified. Today we'll be talking about the moving average convergence divergence, the MACD. The MACD is a very powerful trading indicator used to identify trends, reversal, momentum in the market. You would have heard about the moving average, and if you've never heard about it, then check my previous video where I discussed a lot about the moving average. The MACD is based on moving averages, so which essentially it looks at how the prices are moving over time and help you to make better decisions. The MACD checks for the convergence and the divergence, and the convergence is where the moving averages are coming apart, and the divergence means that the moving averages are moving apart. The MACD really has three components. The MACD line, which you can see the difference between the moving averages, the 12-period EMA and the 26-period EMA, which is a slower EMA. It also shows momentum, which is whether the price is moving up or down, and how strong is the movement, how fast is the market going. This is the momentum. Momentum means the speed. Number two is the signal line. This is the 9-period EMA of the MACD line, and it's used to spot buy and sell signals. And you can, in the MACD also, you have the histogram, which is a visual representation of the momentum and trend. So the histogram shows the difference between the MACD line and the signal line. If the bars are above 0, then it means bullish momentum, and if the bars are below 0, it means we have a bearish momentum and the price may go down. The pro of the MACD is easy to use. You don't need advanced math skill. It's all visual, and it is versatile, which works on Forex and stock and crypto, any kind of market, indices and so on. It's a trend and momentum in one indicator. So it gives you both the direction of the trend and the strength of the momentum. And once again, the momentum is the speed. We would verify this in our chart later on. The cons of MACD, it's a lagging indicator. The MACD is based on past price, so it might give you a signal after the move has already started. The second con is the false signals in sideways market or a choppy ranging market. The MACD is going to give you a lot of unreliable signal. It should not be used alone. We have to combine it with other indicators like the support and resistance of volume for better accuracy. MACD my way. I tend to use MACD in a certain way, which is what I wrote in my script. It's a bit just easy, and I use the 20 SMA, the 100 SMA, and the 200 SMA for the short, mid, and long-term trend. And in the trend, I wait for a MACD pullback and a continuation in the trend. I'm going to show you exactly what I mean in the chart when we get there. Number three is that I use the signal with other confirmations that I know. So whatever you know, add it to it. Support and resistance, trend line, whatever. Tips: stick to higher time frames. With the lower time frames, you're going to get a lot of unreliable signals and noise. So MACD tends to work better on higher time frames, like the daily or the 4-hour chart. So let's go testing in the chart. So this is the indicator we're going to write, and these are the signals. I'll show you what happened today, right? Today I got a sell signal here. I got a sell signal here on Wednesday, which is 2 days ago. If I had taken it over here, I would have made the profits over here. And this is the day before, the days before, another signal here. And this is another signal here. You take one here, you take a profit over here. The point is, this simple indicator of MACD works, but it works because I use it my way, which is this. But before then, let's check our MACD, the one that comes from the straight from TradingView. So this is the MACD, and just as we mentioned, it is very visual. So let's talk about the convergence and the divergence. The convergence means that, let me make this up. Convergence means that the lines, the two lines, which is the 12 and 26, are going close to each other. It is converging. But if it is wide apart, then it is diverging. And when there's divergence, that means there's momentum. The speed, right, is going down very fast or up very fast. So in this scenario, we can see that this place, we're going to get a lot of bullish momentum up. And we can see it from the bars also. A very thick, dark green, right? Dark green. So all this from here to here, we're going to get the market moving up. And we can confirm it from the charts. Okay, let's do it. Yeah, you can see the market. So if you maybe started from when it moved, crossed here and went up, you would have seen that there's also good momentum, and you can see the market going from here up. So we can see a good divergence here, and it started when this blue crossed over this yellow, this orange. Then we moved down, and you can see we moved from here, we moved down to here. So let's see when there's no speed at all, right? So somewhere around, I don't know, maybe here, right? There's no speed. So, and you can see it. And you can see it here. The market was all from here to, I don't know, maybe here, and there was really no speed. So even here, all these lines, you can see that the market was barely moving. It was going down, yes, but at a very slow speed. Right. Welcome to the coding part, the fun part. We're going to first of all get all the parameters, the input parameters that we want. So we want the fast moving MACD length, the slow moving, and also the signal length. These are for the MACD. If you remember, the MACD has the 12, the 26, and for the signal is 9. I always want the 20 and the 200 moving average, because that's what I think is let me know the long-term trend and the short-term trend. You can choose whatever you want, maybe the 10 and 50 or the 10 and whatever. I just prefer 20 and 200. And recently I had 100, right? I will tell you why the 100 is important to me also. This is just a parameter that we will use later on. If you want, yeah, it's not really compulsory. I'm going to also, start to calculate the SMAs. So we have the short SMA, which is TA.SMA, long SMA. This is just for the moving averages. So let's plot the moving averages. All right, and let's add to the chart. All right, so this is just a simple 3 SMAs, and my goal is still simple. I consider a bullish trend when the blue moves over the red, and I see it as a downtrend when the blue crosses down the red. But to calculate the MACD itself, so we use this MACD function, which is the TA.MACD. Check it from you can read it up from this reference manual. So let's generate the trading conditions. The bullish trend is when the short SMA is greater than the long SMA. Now that we generate the trading conditions, we also want the MACD crossover too. If you remember the MACD crossover, the crossover is when this blue crosses over this yellow, a bullish trend, right? And when it crosses down, it forms a bearish trend. So we are doing exactly the same thing. We are saying that, okay, if the MACD line crosses the signal, we are in a bullish trend, and if the MACD crosses under, we are in a bearish trend. I don't want to base my trend on the MACD crossovers. I base my trend on the 20 and the 200, and I just use the MACD for the trend continuation. So let's generate the buy signals. The buy signal is when we have that bullish trend, plus when also the MACD crossover. So we're using both the MA and the MACD. Both of them have to be crossed over. Let's see what happens when we try to plot those signals, right? The buy signal and the sell signals. Let's see what we get. Okay, not bad. We get a lot of signals, right? Accurate signals, to be honest, right? You can see this down signal, this down, this down, this down, right? Then it's also up, right? Then you can see already that just this is enough to give you good signals. You just need to combine it with your strategy. But you can see a lot of wrong signals here because the market is choppy. This is where your knowledge of how to operate choppy markets comes in. I prefer when this middle yellow SMA, when it is in between the blue and red at an almost equal distance. I think the signals are more quality. See here too, right? You can see the 100 SMA is roughly at the middle, right here, and you get a signal. It's much better. So let's do that. SMA is between is when the SMA short is greater than the SMA medium, and the medium is greater than the long, which is the perfect condition for a bull trend, something like this. Blue bigger than yellow, yellow bigger than red, or in a down market, we want red bigger than yellow, yellow bigger than blue. This is it, right? So now let's write a function to see the space between them. So we're checking for the upper distance, right? The upper distance is distance between this and this, which is just, and also we check the difference between this and this. Distance here, 1, then distance 2 here, something like this. So the ratio is to divide this by this, and if it is 1, then you know that they are equal. And if you minus 1 from that ratio, the closer to 0 it is, the better an input, right? So I put 0.5. 0.5 means that it can be twice the size. Maybe the upper region is twice the size of the lower region, maybe. But the point is, the closer to 0 it is, the more equal the sizes, the distances. So 0.2, 0.1, right? And that's it. So if you don't try and think about this properly, I think it's easy to understand. But then this is the function, equally spaced. So what we want to do one more time is to add that filter. We add the signal here and say that if the filter by equally spaced, if this toggle, which is here, the toggle here, right? If it is on, if it is true, but actually filter this buy signal that we get to include if it is equally spaced. If it's equally spaced and if the buy signal is there, then we make it actually the buy signal. And we are actually done. Update the chart, and you can see all those signals are gone, and we are only getting the when it is almost equal. But you can give it some breathing space, all right? 0.5, then you see more signals, maybe 0.3, maybe 0.7, you'll see more signals. I just prefer it to be 0.2 or 0.3, so it's closer to 1-to-1 as much as possible. What is important is for you to change the settings if you want to use maybe the 10 SMA or the 50 SMA or 100 for the long, and the filter, is here if you want to filter it or not. So, yeah, and there goes one of the best things about these indicators is that you can easily just tell the indicators to say, okay, alert me when this signals comes, buy signal or sell signal, then alert. Now that you have this kind of, let's say, signal, now you could just say create an alert, and the condition is that if any function, of course you have to be careful about this and say if bar state that is real time, be careful of this. I mean, we'll probably talk about this probably later on, but it doesn't really matter for now. The point is the alert can be created from here when there's a function call, which is this alert system, let me know, and create it. And you can see it from your alerts from here, right? Active. And whenever it happens, you get an email, you get a notification, whatever it is, you get it. If I get a call around here, I would not take it because I will assume it's going to bounce back up, right? So these are extra confirmations and all, right? You need to do whenever you get such alert. Take you 10 minutes or so to do extra confirmation. It's better than you waiting and checking forever. That's simply is we use the MACD, strategy to take trades. So I find the MACD quite interesting too. And you can also test it on different markets. You can test it on Bitcoin. Let's just see the Bitcoin market. Yeah, whatever. Right, you can see the same thing. You got a signal here, signal here. This is just last week, 2 weeks ago, green signals, all very accurate. So I'm going to be releasing the script on TradingView. I'm going to link it in the comment section. Thank you for watching my video, and please give me a like, give me a thumbs up, and comment and share and all to help boost the algorithm, and please subscribe.